What's up, everybody? Nate here. So things are getting tougher and tougher in the United States every single day. We have inflation that is raging right now at a rate that we haven't seen in over 40 years, and wages are not nearly going up high enough in order to meet that inflation. This means that Americans are constantly losing money in their paycheck while everything else around them is getting more expensive. Now, with that said, there is only one true way to beat inflation and have your money actually make you money. The key is investing. Investing your money in things like real estate, the stock market, and commodities. Typically, the returns that you're going to see in the stock market are much higher than what you'll see in your average savings account. And they're usually going to beat the amount that you're going to get in a raise every single year. So with all of that being said, why exactly are nearly half of all Americans not investing at all? So with that being said, around 50% or so of Americans are investing their money. The problem is, a good portion of that number is investing the wrong way. A new poll by CNBC showed that around 62% of Americans see their 401k investment savings as their key to retirement. And to be completely blunt with you, for most Americans, this just isn't going to allow you to retire. In fact, you may end up losing money. So today I want to talk all about investing and why the majority of Americans are doing it wrong. I also want to talk about why 50% of Americans aren't investing at all, even though everything is going up in price right now due to inflation. But before I get into all of that, do me a quick favor and hit smash or destroy that thumbs up button below and ring that notification bell too. Both of those two things are completely free and they help to show me that you like this video and that you want to see even more just like it. Thank you so much for doing that. And now let's talk all about investing in the United States. All right, so first I want to talk about the Americans that are investing. Around 50 to 55% of Americans are investing. However, a large portion of those, nearly half, have no money in individual ETFs, index funds, or stocks. All of those investments are made through a company-sponsored 401k plan. Now, if you're not familiar with the 401k, this is basically something that came up in the 80s and 90s as a way for individuals to save money so that they could retire. For a lot of companies, this is a managed fund. So every time you get paid, you'll essentially contribute a portion of your paycheck to this 401k plan. A lot of the times, your company will match your contributions up to a certain amount. So it might be around 3%. So if you put in around 3% of your paycheck, then your company will contribute 3% as well to that 401k plan. In the 90s and early 2000s, companies viewed this as a great way for many employees to start investing their money. They basically really didn't have to do anything because this was a managed fund, like a mutual fund. A fund manager will basically make all of the decisions in the fund itself. They'll pick all of the individual stocks and ETFs that you're going to invest in. All you need to do is contribute the money. Then you'll have all of that money that you can then pull out and retire on. Now, there are two big problems with 401k plans in 2022. The first is taxes. When you contribute to a 401k plan, all of your money is put in tax-free right now. So you're actually putting a lot more in than you would with other plans, like a Roth IRA or an individual ETF. None of your contributions are taxed until you start pulling money from that account. But taxes can be very complicated, especially with the more money that you have in a particular account. Simply put, the more that you have in a 401k plan, the more that it's going to be taxed later. And the problem is, we don't really know what the taxes are going to look like when you go to retire and pull that money out. Sure, if you look at the taxes today, you might have a lot of money. However, taxes in the United States could massively change. People that have a big retirement savings in their 401k may end up losing a lot of money. The other thing you got to keep in mind too is the amount that you save today is going to be worth a lot less in 20, 30, and even 40 years from now when you go to retire. If we assume that inflation is going to be around 2 to 3%, then you can estimate what you'll be able to pull out of your retirement savings every single year. However, we just don't know what inflation is going to be. For instance, inflation for March 2022 was around around 8.5%, and it's going to continue to go up, in my opinion. We don't know how long it's going to go up for. It could be a few more months, it could be a few more years. That is all slowly eating away the value of your 401k, and unless you contribute more and more every single year, then you're not going to be able to retire like you think you can. That is a big problem because now your money is getting eaten away by inflation and it's getting eaten away by taxes. Now, before you go and freak out and try to pull all of your money out of your 401k plan, there's a few things that you should know. For one, if you have money in your 401k, then you should leave it there. Unless there's any penalties for rolling it over into another type of plan or pulling it out, then just leave it there. It's going to continue to grow and you are investing your money, so this is a great thing. In addition, you should absolutely take advantage of a 401k plan if your company sponsors one. If you don't, you're basically leaving free money on the table because they'll contribute a little bit every single month as well. So there is absolutely nothing wrong with investing in a 401k plan. That's not what I'm saying. What I'm saying is around 62% of workers are relying on their 401k in order to retire. And in today's economy and probably in the future, that's just not going to happen. Your 401k is a subsidy for your retirement. Yeah, you're gonna be able to make a ton of money off of it, but you're probably going to need a lot more than you think. And if you're solely relying on a 401k, well, then I've got bad news for you. The issue with 401k plans is something called a vesting schedule. So a vesting schedule basically means how long you have to stay at that company and leave those contributions in a 401k plan in order for all of that money to be 100% yours. This is something that has come up with companies over the last few years. They want to contribute some of their funds to your 401k, but they don't want you to just take their money and run. Nowadays, they want you to stay with the company for the long term if you're going to take some of those benefits. However, this can be as long as 6 years for some companies. So you're contributing all of this money, but if you decide to leave that company before that 6 years is up, then you're going to lose a portion of those contributions, meaning your 401k is actually going to shrink. Individuals should know this because if you don't plan on staying with a company for a long period of time and you're taking all of your money and putting it in a 401k plan, then you want to get the most bang for your buck. However, it might lose you money if you go against the vesting schedule. Not only that, but any contributions you make to a 401k plan and any withdrawals you make are subject to limitations. For instance, you can only make a certain amount of contributions to your 401k every single year. That means your retirement is going to be limited as well. You're only going to have a certain amount if you rely solely on a 401k. In addition, if you decide that you need to pull some of your money out of a 401k plan for things that you want in life, like a new car or a lavish vacation or basically anything that you want, you are severely limited. And that money that you want to pull out is immediately going to get taxed and you're going to lose a large portion of it. So in a way, a 401k kind of traps your money a little bit because you can't simply just pull it out whenever you want to. You can only pull it out for certain things in order to get a lot of tax benefits. And in addition, you can only put in so much every single year. So if 401ks are so bad, then why are millions of Americans pouring their money into them every single month? Well, what I think this all comes down to is lack of financial education and how easy 401k plans are. Additionally, especially my generation of millennials, that you have to 1, save all of your money, and then 2, go to college to get a really good job. My generation was basically put on a train and then put on a track and was expected to go through life a certain way. I was never taught about stock market investing or real estate investing or commodities when I was growing up. All I was taught about was 401ks because that's what my parents had. And in their defense, this is all they knew. They knew to save money because that's what their parents did, and they knew they needed to retire because pensions were starting to dry up and they saw a need for investing, but not in the stock market. The stock market was seen as complicated because in their time, it was really difficult to invest your money. You had to go through a traditional brokerage, which would cost you so much in fees, and it wasn't easy. You had to schedule appointments just to buy one stock. Nowadays, though, stock market investing is so accessible to anyone and everyone out there. All you need to do is literally download an app like Robinhood or M1 Finance, and you can start buying and selling shares of every single publicly traded company on the New York Stock Exchange. That means I can start growing my money and I can do whatever I want with those shares without putting my money in a 401k plan. But individuals were taught that this was the way to retire. You put your money in a 401k, you let it grow, and at the end of your time in a company, you will be able to retire. But what I'm telling you is this is simply not true. 401ks are extremely beneficial if you use them the right way. Company matches your contributions, then yeah, you should be taking advantage of your 401k plan. And if you have money in a 401k from previous companies or your current company, leave it there. But for the future, you need more than just a 401k. You need other types of assets that build faster than what a 401k can do in order to retire how you want. You have to do what's called diversifying your portfolio. You have to own different types of assets. I'm not saying you need to solely invest in real estate or commodities or the stock market, but it's nice to have a different group of things so if one thing fails, you have something else to rely on. And honestly, I think this ideology when it comes to investing is going to change over time. We've seen over the last 2 years more beginners enter the stock market than we ever have in American history. In 2020 and in 2021, millions of people started buying stocks on the stock market. And this is a great thing. And it seems like the younger you are, the more likely you are to start investing. My generation and the people around me didn't invest in stocks. No, we had 401k plans, or we just didn't invest at all and we saved our money. That's the way that it was. But the new generation, like Gen Z and younger millennials, are starting to invest their money. And they're doing it all on their own. Part of this is because we've had education dramatically change in the United States over the last 15 years or so. Now, individuals don't need to get a college degree in economics in order to invest in the stock market. They can do it all on their own, and they can learn everything they need from things like YouTube or blogs. The internet is a huge resource that is completely free. So that financial education is going to change, and I think as it does, we're going to see fewer and fewer contributions for 401ks, and companies most likely are not even going to offer them 20 and 30 years from now. Sure, there will most likely be something, but it won't be considered a 401k anymore. It'll probably be something else that can compete with individual stocks, ETFs, and index funds. That's bad for your advisors and your mutual fund managers because they might be out of a job. Obviously, there's still going to be a need for mutual funds and ETFs in the United States. Some people just prefer to invest that way, so those advisors and managers are always going to be around, but there might be a lot less of them. You can invest on your own, but I do want to caution you that while you can invest on your own and start building your money, you gotta know what you're doing first, or else you're gonna just lose all of the gains that you possibly get. Anybody can invest, yes, but learning how to invest the right way for your particular goals is going to be much more effective than just YOLOing it all into GameStop. I can't tell you exactly how to invest. I can't tell you what exactly to put your money in because that is all going to depend on you, your goals, and your long-term future. A 401k plan might be working for you right now, and for millions of Americans, it's going to help them retire. What I'm saying though is a 401k was never designed to be your sole retirement plan. It was designed to subsidize your retirement. In order to get investing right and to meet all of your long-term and short-term goals, then you have to diversify your portfolio. You can't just invest in one single thing forever and hope that you'll be able to retire. I mean, I guess you can, but the odds of you retiring successfully are gonna be slim. You have to invest in a lot of different things for a very long time in order to start seeing huge gains from the stock market or the real estate market or in commodities. Things are going to be different in the future, so you don't know exactly what's going to happen with your 401k plan. And in the same breath, we don't know exactly what's going to happen with finance in general. I think finance and financial education is in a great space right now, and then it's only going to get better as time goes on and resources improve. More and more Americans are starting to pick that up, and that's great. But even still, the majority of Americans are not investing, and the ones that are only using their 401k. This is a dangerous recipe for disaster down the road. So in order to get the most out of your finances, know exactly what you want. Why are you investing? Where is my money going? And is there a better way? Number two, how long do you want to invest for? The short term or the long term? Because that's going to have a pretty big impact over your goals and your contributions. Not only that, but the plans that you actually choose to invest with. And number three, how do you want to retire? Do you want to live in a big lavish mansion by the beach and not have to work a single day for the rest of your life after 65? Or do you want to live a lot more modestly? That could mean a lot of different things. Paying off a lot of your bills can help towards retirement, so you might not need to have a lot in your 401k 401k plan if that's the case. In addition, if you want to retire a lot earlier, say 45 or 50 years old instead of the typical 65, that will influence the amount that you add to your 401k or ETF or index funds every single month. Again, knowing what you want here and the life that you want to live after retirement is going to be super important to your contributions of today. But trust me, if you do the work right now and educate yourself as best as you can, retirement and your finances in the future will be in a lot better of a place. But now I want to hear from you on this issue. What do you think about around 62% of Americans relying on their 401k plans in order to retire? Do you think that 401ks should be the only thing that Americans need in order to retire? Or do you think that economics and our finances are changing? And if Americans want to get the most out of their finances and their 401k and retirement savings in general, then they're going to need to do a lot more. Whatever your thoughts are, leave a comment below before you go. But that is it for today's business and financial news breakdown. Thank you so much for watching. If you want to stay up to date with all of the top business and financial news from around the country, our team puts together a free daily newsletter, and you can subscribe to it by clicking the link in this corner right here. And if you want to stay up to date with me and everything else happening in the business and financial world, I'm putting out updates 7 days a week over here on this channel, and I've actually got another one ready for you right here, so be sure to check that out before you go. That is it for me, everybody. Be kind out there, and I'll see you all in the next one.